with Joel Liska, responding to my video, or my short video about pay your fair share. Remember, this is the one where Joe Biden and Kamala Harris and Bernie Sanders and Elizabeth Warren are saying the rich need to pay their fair share, the corporations need to pay their fair share, but they never define it. It's this undefinable thing that they use as a political weapon. And when you try to ask people, well, what is my fair share? What is Elon Musk's fair share? No one can specify it. Everyone's got a different opinion. So to me, it's the most irrational of all political arguments. And it's definitely worthy of challenging. And that's what I did in that video. Well, Joel wrote back and he said, well, when Reagan took office, the wealthy and corporations paid around 70% in taxes. By the time he left office, they paid around 29%. Okay, now hold that thought. After I read this, I'm going to explain that that's not true, and I'm going to show you why. Joel goes on to say, read that again. Okay, I'm going to read it again. When Reagan took office, the wealthy and corporations paid around 70% in taxes. By the time he left office, they paid around 29%. Read that again. During his second term, banks merged their commercial and private banking systems, thus making it easier for the wealthy and corporations to shift assets in ways to hide their actual net values. Okay, that didn't happen under Reagan. That happened under Clinton, but I digress. With stock buybacks becoming the rage towards compensation packages, top execs acquired non-taxable incomes and the corporations increased their holding values. Hence, capital gains. Capital gains is where the top earners, in quotes, earners, can be and should be taxed. 35% flat after 10 million from total accrued earnings would put an end to the abuse. Then again, outlawing stock buybacks would do the same. What has Musk done to earn a $56 billion compensation package? Okay, so there's a lot in there, right? Okay, first of all, we know, you've heard you must have heard all the rhetoric that the rich need to pay their fair share. The rich don't pay any taxes. They're getting away with it. You know, my secretary pays, that's what Warren Buffett says, my secretary pays higher taxes than a billionaire. That's a bunch of crap too. Now, do some billionaires pay a lower percentage of their income in taxes than his secretary does? Yeah, that could be true in some cases. But still, billionaires pay a ton in total dollars. And frankly, the fact that different people pay different rates is an example of how the whole income tax system is screwed in the first place. It's the exact opposite of equality under the law. It's inequality under the law by design. Not just with different rates for different people, but different deductions and withholdings and shelters for different people and different industries and different circumstances. The exact opposite of inequality before the law. But let's go back to this point. When Reagan took office, the wealthy and corporations paid around 70% in taxes. By the time he left, they paid around 29%. Okay, let's break that down. If you look at the highest marginal tax rate, that's true. Okay, which means that, we have a progressive income tax code, and each chunk of money you earn has a different tax rate. Typically, the more you earn, the higher your percentage tax rate is. And remember, back in the days of Eisenhower, the highest tax bracket, I think, got as high as 92%, which is just insane. That's like almost perfect theft. But they never paid 92% on all their income. It was just only on that portion that was above some big number, above 2 million or whatever it was back in the 1950s. Now, when Reagan became president, there were already some tax cuts that were implemented by Kennedy and perhaps by some of the other presidents in the 60s and 70s, to the point where the highest marginal tax rate when Reagan was president was 70%. But no one paid 70%. First of all, that only applied at the highest portion of your taxes based on the marginal tax system. But at the same time, there were so many deductions and so many loopholes and so many tax shelters that no one paid that amount, that the net amount was way less than that. So what was the net amount? Well, here I have a chart I want to share with you. So this shows what the effective tax rate is on the top 1% of households going back in history. Now, this is whatever the marginal tax rates were, minus all the deductions, and then net, what's their percentage in tax? And you can see in the 1950s, people paid about 42, this is the top 1% overall, paid about 42% of their income in taxes. And as we see, we get into the 1980s, and they were paying, in the 30s, maybe not as high as 42, but in the 30% range. And then in the late 80s, it got lower. It got into the lower 30%, like between 30 and 35. But then eventually Reagan started increasing taxes again on the rich. He cut them and then he raised them again, but net, he cut them more. But the point is that no one was being taxed 70%. No one was being taxed 92% back when Reagan was president, or when Eisenhower was president, because of all the loopholes and all the exceptions and all the different rules for different people and picking winners and losers that's built into the IRS tax code. So this is a trope that keeps getting rolled out all the time. Oh, the rich used to pay 92% in the 1950s, and back then we only needed one income, and we were able to support a family of four, and it wasn't a problem. And that was because the rich paid their fair share, 92%. No, they didn't pay 92%. They didn't pay 70%. But Reagan did cut taxes. Then he says, during his second term, banks merged their commercial and private banking systems, thus making it easier for the wealthy and corporations to shift assets in ways to hide their actual net values. Well, that was, what was the name of that bill? That was I think it was Glass-Steagall, that was in the 1990s, where there was a law that said commercial banks and investment banks had to be separate. A commercial bank was where we would go to Bank of America or Wells Fargo or Savings and Loan or whatever it was, where we would have checking accounts and savings accounts and maybe a home mortgage, that sort of thing. And then there was investment banking that really catered to like these acquisitions and mergers, and it was a much bigger deal in the world of Wall Street. And those were meant to be separate. Like one bank, like Wells Fargo, couldn't be in both. They couldn't be doing commercial banking and investment banking. Glass-Steagall was repealed, I think, in 97 when President Bill Clinton. And some people say that that's the reason why we had the Great Recession 11 years later in 2008. But what's an interesting fact about that is even back in the 90s, there was almost no banks that were doing both. Most banks were in one category or another. I mean, Bear Stearns, JP Morgan, what's the other one? Goldman Sachs. I mean, they were all investment banks, and they didn't monkey around with commercial banking. And then meanwhile, there were commercial banks like a B of A and a Wells Fargo and that sort of thing that didn't really do investment banking. Now, there was one exception. Washington Mutual, but it wasn't an exception, but Washington Mutual was an example of a company or of a bank that was a a commercial bank that went under. But they weren't doing investment banking in the Great Recession. The only one I can think of a bank that did both was Citibank. And Citibank failed over and over again and kept getting bailed out over and over again. And that was the one exception to the rule. Okay, so is that the reason why the rich are richer? I don't think it is. And he goes on to say, with stock buybacks becoming the rage, yada, yada. I remember back in the Great Recession, in the throes of it, corporations were sitting on large stockpiles of cash. And they were afraid to invest it in their companies because the economy was so screwed up. And so they just sat on that money. And people were criticizing, especially our friends on the left, were criticizing corporations from sitting on all that money, all that cash. Well, when companies are buying their stock back, what are they doing? First of all, they're liquidating all that cash. They're buying the stock back. Okay. And who's getting all that money? Well, the people that own the stock. Okay. And those could be, mutual funds and Wall Street companies that, are traders, but it could be you or me that might happen to have some of that on our 401k, on our pension, or maybe we own stocks individually. So when companies are doing stock buybacks, it's not some nefarious scheme. I mean, what they're doing is they're making a bet on themselves by buying the stock. Now, by buying the stock, they're also taking a lot of stock out of circulation to try to artificially increase the value of their stock and using that as a way to help pay off executives. But that's their mission as a business. They have a fiduciary responsibility to maximize shareholder earnings. And high stock prices is what the corporation exists for in the first place. So again, so many of these distortions. And then finally, he says at the bottom, like, what has Musk done to earn a $56 billion compensation package? Well, the board and the shareholders at Tesla agreed to that. They said, if you got our stock price above a certain level, you will make this amount of money. And the stock price got above that level. So what did he do to earn it? He did it by increasing the value of the company. He did exactly what a corporation should be doing. That in itself is basics of capitalism. Now, I will say this, that the value of Tesla is artificially enhanced because they get so much damn corporate welfare in the form of subsidies, either for the purchase of EVs, which mea culpa, we own two, or in the subsidies for solar, mea culpa, we have solar. And, or in the case of, the buying and selling of carbon credits, which is the biggest source of profit for Tesla. But see, that's all rent seeking. That's all manipulating the way the government works to maximize shareholder value, which is a rigged economy, which is the exact opposite of a free economy. And you know which one I support. Okay.